Wednesday, October 2nd, 2019, Maneco 64, home of alternative economics and contrarian views. I'm in a different place, of course. My wife and I traveled yesterday. We've come to Florence. Well, great city. A little bit of background on myself and my wife. My wife, I met her when I moved to London in 1992. She worked in banking as well, in the city. She worked for Barings Bank, the bank that was brought down later on, I think 1995, by Nick Leeson, right? So aside from working in the city, my wife is very interested in art. She's a good artist, I tell her. She doesn't seem to think so, but she is. And she loves Florence. She's been here before when she was in school, when she was a teenager. I've been here before. That's my background. I've been here before on business for just one day. When I worked in the city of London as a futures and options broker, I did a lot of business with Italy from around 1993 to 2004. The bulk of my clients were in Italy, so I did a lot of business trips, mostly to Milan. Milan is the financial center nowadays in Italy. I did a trip to Florence once. We came to see a prospective client, so I stayed here for just a day. I didn't get to see much, so it's really nice to be back here. We're going to be spending a week, so there's going to be a lot to see. And before I go into the markets today, I'm going to try to do every day a little bit of the history of Florence, because it's not just about art. Florence was the financial center of the world, the known world, I would say, back in the late Middle Ages, early Renaissance. And I'll start with the Middle Ages. And two really important families that were here, that were the biggest, probably wealthiest bankers, merchant bankers, back before the Medici, who came in the 1400s. And they are the Peruzzi and the Barty family of the 14th century. And I'll go through the great crash of the European financial system in 1345. And that's where I'll start for Florence. And it's kind of appropriate with what's happening in the modern day. So I've got an article here from The Financial Engineer. It's from March 31st, 2013. And I'll go through it. It's not very long. So it's called 14th Century, the Crash of Peruzzi and the Barty Family in 1345. The crash of the European financial system. The other thing that happened a little later was the Black Plague in Europe, started in 1348. So it was a tumultuous time in Europe. So Florentine banking family. By 1310, they were the wealthiest family in Florence. They and the other two leading family banks, the Peruzzi and the Acciaiuoli, maintained branches at locations stretching from England and the Netherlands to North Africa and the Middle East. So a lot of people say that it was the Rothschilds who invented international banking by sending their sons to 5 different places in Europe. But the Italian banking families of the Middle Age and the Renaissance were doing that way before the Rothschilds, right? The company's basic operating capital belonged to the family and a few close partners, but money was also received on deposit from outsiders. The foreign branches were operated by salaried employees or by individual partners sent abroad. The firm traded in the agricultural commodities and industrial products, especially woolen textiles, for which Florence was a major center of production, but they drew much of their profit from fees levied on exchange of currency. And this is the interesting part, because the church was very important back then, the Catholic Church. So it says, These fees also served as a legal screen behind which concealed the practice of usury, charging interest on loans. It was considered a sin back then, a practice outlawed by canon law. Conducting large-scale commercial and credit business over great distances was risky. The Florentine banks flourished because they had better and more current economic information than those they did business with. Extension of credit was the most risky activity of all, and in the 1340s, the Barty and other leading banks discovered this to their sorrow. There was no bailout back then. Am I trying to defend the Florentine bankers? No, I'm just talking about it, but you'll see what happens. Both firms, Peruzzi and Barty, made the mistake of lending vast sums to King Edward III of England during the 1330s as he prepared for the conflict with France that became the 100 Years' War. The bankers soon realized that they had extended too much credit, but since they had already lent so much, they felt compelled to lend more. Does that sound familiar? Well, nowadays, the system is issued so much debt and credit to governments, to corporations, to individuals. They just feel compelled to issue even more, right? QE, money printing, negative interest rates. They want people to take on more debt, right? Lest they lose what they had already lent. They also continued lending because they needed royal licenses for the export of medieval England's great international product, wool. And lending to the king was the price they had to pay for permission to export. By 1343, when it became obvious that Edward was not going to score a speedy victory, the king repudiated his debts to the unpopular foreign bankers. The amounts lost were enormous. 900,000 gold florins owed to the Barty and 600,000 to the Peruzzi. None of it ever repaid. So what's the gold florin? Well, that's the Florentine coin. One of them is just about 3.5 grams of gold. So it's just over 1/10 of an ounce of gold. It was a huge amount for the time anyway. Both firms and several other Italian banks were ruined, and since they also held money on deposit from wealthy individuals throughout Italy, their collapse spread financial loss far beyond their membership. The Peruzzi Bank went into bankruptcy in 1343. The Barty struggled on for 3 more years, but were also liquidated. Smaller firms survived the crash, and by the end of the century, rose to great wealth and power. The new masters of Florentine banking were the Pazzi, Rucellai, Strozzi, and Medici. Though these firms never had the vast capital assets of the banks that perished in the 1340s, some economic historians have concluded that this collapse of the early Florentine banks was a major cause of the Great Depression that lasted beyond the 1340s. So there you go. I thought it was interesting to start with the history, and I think we could be on the cusp of another great financial crisis, pretty much like in the 1340s in medieval pre-Renaissance Italy or Florence, right? Don't forget, Italy only became reunified for the first time since the Romans back in 1861. So up until 1861, it was just several different city-states, right? So where am I? Well, we booked an Airbnb apartment in Florence. It's the first time I've done Airbnb. I was a little bit worried because you read stories. Like recently I read something in the Daily Mail that someone booked an Airbnb and they got there and there's no place to stay, which is a scam, of course. Yesterday on the plane, we were talking to the people ahead of us and they asked us, oh, where are you staying at, when we said Airbnb, and they said good luck. But I have to say it's beautiful. The pictures we saw on the website, they looked nice, but when you come in real life, it actually looks a lot bigger. And it's usually the other way, right? Places look, when you go there, they're a lot smaller than they look in the photos, but this is completely different. So, and it's very central. So what about the markets? Yesterday was an interesting day. Of course, I didn't make a very long video. I was planning to, but we didn't really have much time because we needed to get to the airport. I did see where the markets were early yesterday, and the stock markets were very strong. Precious metals were, well, gold was getting hit hard early on. I think we got to 1458. Silver was actually doing well, which I thought was encouraging early yesterday. But then when I arrived in Florence and we settled down, I started looking at the markets, and I saw that the Dow was down over 200 points, even 300 at a juncture. And I saw that we had a manufacturing ISM manufacturing PMI, and that was a huge surprise on the downside, of course. That number, let's have a look here, was expected to come out at 50.4 for the month of September. And the previous number had gone under 50. When the number goes under 50 in these ISM numbers, and by the way, ISM data, they're just surveys of purchasing managers in the manufacturing sector. So any survey above 50 means the sector is expanding. Below 50, it's contracting. So yeah, it was 49.1 in August. They expected to rebound in September to 50.4, but it actually came out at 47.8, which is a huge move down from 49, even from 49.1, a lot lower than the expectation. And markets react more to the relation to the expectation than the previous number. So not good. So that's why I think we had the move in the stock market lower. The other thing that I read about 2-3 days ago, and it was a very interesting article from Zero Hedge, why the US decoupling miracle ends in 72 hours. So they were talking about how the US macro data surprises were on the upside for September and August. And one of the reasons it does that every year apparently is because it's the end of the fiscal year, and governments, the federal government and their departments, if they have any extra cash in hand, they will spend it, because if they don't spend it, the next budget will cut their budget, because they'll say, oh, you didn't spend all your money. So there's a lot of billions and billions of extra spending. It's the so-called spend it or lose it. And they are quite prescient, Zero Hedge, to say that the miracle ends in 72 hours, because lo and behold, October 1st, the number comes out for September, and it's a lot lower than expected. Of course, the survey was done in September, but it's looking forward, right? So I guess the purchasing managers didn't see things getting very constructive from October onwards. So yesterday then the Dow finished almost near the lows of the day, which is not encouraging. Sometimes the PPT is able to get in there and make things look better than they really were throughout the day, but it finished at 26,573. The low was 26,562. It was down 1.28% or 343 points. So not a great day. So right now it's quite early here in Florence. It's 7:24 a.m., which is really 6:24 in London. We're 6 hours ahead of New York time, or Eastern time here in Italy. Spot gold is drifted a little lower, not that much. It's at 1477.60, down just over $1. I saw yesterday the high was 1487 and the low 1458 or thereabouts. Does this mean that the correction in gold is over for now? I'm not too sure. It doesn't look very good in the short term. Longer term, of course, I'm still convinced that we're going to go a lot higher in gold, but we could see a little bit of volatility, in my opinion, in the price of in the fiat price of gold. So overnight, the high has been 1482.70, the low 1475.60. Silver, of course, yesterday as well, did trade, I think, up to almost 1740. I think we need to get back above 1730. So you can see there's quite a bit of resistance around this level. Gold as well, we need to get back above 1483.84. I think those were important supports when we came down in the last few days. Right now, silver is unchanged, 1723. The range has been 1718 to 1736. The Dow is up 47, the Dow future 26,618, so up slightly. S&P is up 4 at 2944, so that 3,000 level now is way in the wing mirror, right? It's in the past for now. Not looking great, the stock market. The Nasdaq 100 future is up 14, 76.98. Currencies, the pound is down 0.16% at 122.84. Euro is stronger. It's gone back above 109. It was below 109 yesterday. It's now 109.34. Dollar is at 107.85, unchanged against the yen. And also the yuan is pretty much unchanged, 714.60. WTI crude 54.28, up 1.4%, and Brent is at 59.35, up 1%. I'll finish with the bond market. The 10-year yield is at 166, up 2 basis points, but it dropped quite a bit yesterday. The short end dropped quite a bit yesterday as well. So the bond market looks like it could be set to drop lower in terms of yields, and the prices could continue to go higher. 2-year yield dropped quite a bit yesterday compared to the 10 years. So at least the curve did not flatten further. The 2 years at 156. I think we were at 163 yesterday. So there you go. Very interesting start to October, which, as I've said before, and many of you know as well, it can be a very rocky month for the markets. I will do a little bit of history of Florence, especially the financial history, the banking history. I've been reading this book here, The Medici Money, about the Medici family. Not only them, but the system of banking they had here in the Middle Ages and then Renaissance. Yeah, Florence is like the cradle of the Italian Renaissance. So we're going to have a lot to see. Today we're going to do a tour, guided tour of the Uffizi Gallery. As I said, my wife loves art. I'm quite interested as well. It's always nice to see beautiful art. If you enjoyed this video, make sure you hit the like button, subscribe to the channel if you haven't yet, and you can also follow me on Twitter, Steemit, and on DTube. I wish you all a great day. Take care. Bye.